G'day guys, David here from the Xylem Zone. Just want to talk to you today about this word up here, EQUITY, equity. What is it? How can it help you? And what happens if you don't have it? How can you create it? And why it's the key to your future freedom and future success. Now let's go a few things. It's a term that's thrown around a lot, and equity comes in many different ways. Now equity, the simple one is, it's going to be your income, Income, that can be from your job, it can be from business. You could also get a tax refund from assets, that would be income. You can sell stuff, you might get dividends for some shares. But bottom line, any income that you get in, that obviously you don't spend, that sits in the bank or sits under your pillow, doesn't matter where it is cash, is equity. That's the simplest form. But the one that, and obviously you've also got the term equities. I'm not a financial advisor, so I'm just using that term, but that's more your money market and your share market, and equities is a general term there. Of course, it does provide a return, which can be dividends, which is sitting in your cash flow, but equities is different to equity. The most common thing we know about equity is it's the one that's found in assets, and most commonly in property. Now, when I started, I didn't even know what the word equity meant. And so I had to have someone explain this to me to even realize what possibilities were. And at that time, I didn't have any. I was just starting out. But the reality is, if you've got your own home, you may have equity in your own home. So let's imagine you've bought a property for $500,000. And over a few years, you might have got it at a discount. You might have renovated it. The market might have went up, whatever the case is. And let's say it's now worth $600,000. Now, if you got a loan of 90%, that's $450,000. You would have a loan of $450 on your own home. Doesn't matter about the repayment structure. That's a cash flow factor. We're just talking about equity. So, if the value has now gone up to $600, is there equity in that property? Absolutely, there is. That's the difference between your loan amount, $450, and the new value today, not what you paid for it originally. So, of course, that's $150,000. Now, to get your hands on $150,000, what would you have to do? Well, you'd have to sell it. Most people don't want to sell their house. And the reality is there's obviously costs related to that. With your home, at least you don't pay capital gains tax. But you're now out of a home, you've got to find another living arrangement. So let's assume you don't want to sell your home, but you don't want to just spend your life paying a mortgage off for 30 years and you want to set something else up. So let's assume that you might want to then go out and buy a property or a business. I'm going to work with property. So you do your first investment property, so you can get some tax deductions, help your cash flow, and maybe even pay off your house a bit faster. There's different things you can do. But will the bank give you all the cash that's sitting there? The reality is they won't. Most banks will only give you up to 90% of the equity that's sitting in your house at $600,000. Now, I just did some quick calculations on that, and 90% of 600 is $540. And remember, our loan was $450 because we would have put in $50,000 deposit. So there's now $90,000 of equity sitting there that would sit up on a loan. So in your property, you'd have your original loan, which is your principal and interest, probably your bad debt, and now you'd have a second loan here for $90,000, and obviously that would be set up on a redraw or a line of credit. And obviously what you use that money for determines how it's classified from a tax point of view. In this case here, I want to use it to buy my investment property. So now I can buy my property here. I can go down and put my $90,000 down, take it out of here, put it down here, and now get a loan for the balance to buy my first IP. So I've been able to get into a second property without using any of my own cash and use the equity in my property to do that. And with my equity in cash, what I've done is kept that aside to give me buffers, to make me safe if anything changes, and to make sure I've got a great sleep at night factor as well. But guys, hopefully that explains it. There's a whole process there of how to build equity and roll equity. The market, I've used an example of capital growth. To be frank, I don't think the market's going to go up a lot in the near future in most areas. So you've got to come up with different ways of how to create equity and different strategies to do that, regardless of the circumstances, regardless of the market, because there's always going to be an opportunity there. But you've got to get it lined up with where you are, what your goals are, what your needs are, what your financial position is. As educators and strategic coaches, that's what we do every single day of the week. But hopefully that's giving you the first insight go and have a check and see if you've got any equity in your home. And if you're wanting to get in your home, let's work out. You might even want to go out there and have someone who's a guarantor to help you, like some parents who have someone else has equity to help you get in. That's how I actually started in the beginning. That's a whole new story. Thanks, guys. Hope that's been useful to you and look forward to catching up soon.